Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about FOMC and how it relates to Bitcoin. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. Let's go ahead and jump in. So Powell came out today um, during the during the meeting, and he basically said all the same things. I mean, I listened to the whole thing, and I didn't really hear many things that I hadn't already heard. I think there was some interest in what the dot plot in the SCP would show, the summary of economic projections. There were some investors certainly thinking that there is a decent chance that they may roll back some of those rate cuts, especially considering that a lot of this inflation data is still sticky at 3%. So I think some people were sort of thinking that that might be the case. Maybe they would walk it back a little bit and say maybe only 2 rate cuts this year, but they didn't do that. If you go look at the SCP, they're still saying 3 rate cuts are more than likely. And so because of that sort of revelation, what ended up happening is now the odds of a rate cut in June have jumped all the way up to 73, or to get to 5.25 by June, 73.1% chance, and even a 6.2% chance that you're at 5% by June. Meaning there's only about a 20.8% chance, about 1 in 5, that the Fed doesn't cut in June, according to the current probabilities. Now, this stuff changes. There is a chance they could cut in May. It depends on what happens between now and then, but right now the market is speculating that June will be the most likely outcome for a rate cut. And so when you think about rate cuts, right? We've talked before about, what it's going to look like, what it would likely look like, what it's historically looked like. And one of the things I've mentioned many, many times is, what does Bitcoin do going into rate cuts? Now, unfortunately, we don't have a ton of data. I mean, we legitimately have one example. One example. So at the end of the day, there's not a whole lot that can be learned from a single example. I can go through that example like we have and say that, well, this is what happened last time. It doesn't mean that it's going to play out the same way. We have a data point of 1, right? But given that we have a data point of 1, it might at least be worthwhile to know what happened during that time, right? Not to say that it has to happen like that, but just say, you know what, given this one data point that we have, what actually happened when the Fed cut rates? Now, what's interesting is the Fed is still projecting 3 rate cuts. The reason why I find that interesting is because in 2019, we had 3 rate cuts. We had 1 rate cut in July, where they went from 2.5% down to 2.25. And then we had another rate cut in October. Really, we had one in September and then October. So it was July, September, October. They were all 25 basis point rate cuts. So we essentially went from 2.5 to 1.75. Now, the reason why I find it interesting is it almost feels like a carbon copy of 2019 in terms of what is the most likely outcome based on the current probabilities, right? So you have 3 25 basis point rate cuts starting from 2.5. Now we are at 5.5. 3 25 basis point rate cuts would get us to 4.75, which, by the way, if you go look at the summary of economic projections, that's essentially where the Fed has us by the end of the year, is at around 4.75%. So because of the similarities, I think it's still relevant to make the comparison. But note that the environment, the macro environment, is different than it was in 2019, right? It's not the exact same setup. And I don't think that people should assume it's the exact same setup. But what happened back then is that Bitcoin rallied into the first rate cut. We have been talking about this idea, what seems like forever, we've been talking about this, even when they were raising rates. We said that, look, last cycle, Bitcoin rallied until the first rate cut actually arrived. And it actually topped out 1 month before the first rate cut arrived. So when we think about that, maybe it's worthwhile to think about, well, if it plays out like 2019, and if Bitcoin were to top out 1 month before the first rate cut, you can find the reasoning for why we spend a lot of time sort of daydreaming about when the first rate cut's going to actually come, because it might mean something, right? It might mean something for the cryptoverse. Now, what you should know is that when the first rate cut arrived, it's not like Bitcoin just capitulated. I mean, it essentially hung around the highs for several months before ultimately dropping below its bull market support band. But again, it topped out 1 month before the first rate cut, right? 1 month. Market topped in June. The rate cut came in July. So when we think about the Fed and what they're most likely to do, we said they're probably not going to cut in March, right? It doesn't make sense, especially with all this inflation data still printing at 3% and the unemployment rate still below 4%. Powell did say, though, that, let me find some of these quotes. He said, it will likely become appropriate to dial back policy restraint at some point this year. He said, what else did he say? He said that strong hiring would not be a reason to hold off on rate cuts. So again, I mean, it seems like he's really pushing the idea that rate cuts are coming. If there were a significant weakening in the data, particularly the labor market, there could also be a reason for us to begin the process of reducing rates. There's nothing in the data pointing to that. One of the things that was interesting was that he talked about, if there's a surprise, right? Well, the issue is that the Fed is only really projecting out 4% unemployment, for the year, right? They're only really projecting out 4% unemployment rate. You can see it right here. And so it wouldn't take a lot to surprise, or say to quote unquote, surprise the Fed, because the unemployment rate is already at 3.9%. So I don't think, I don't really think it would take a lot to theoretically surprise them. I don't really think they would be surprised. They might play it off like they're surprised to justify the rate cut. But I mean, it just seems likely that at some point between now and the end of the year, given the pace that the unemployment rate has been going up, like it seems likely that we're going to go above 4%. Now, I could be wrong, right? I certainly could be wrong about that, but it just seems like we're likely going to go above 4%. And I think when we do, that will justify the first cut, right? So will the Fed cut in May? Will they cut in May? Market says probably not, right? Says probably not a cut in May. In fact, only a 7.9% chance. If they were to cut in May, which is a big if, right? If they were to cut in May and Bitcoin were to follow the pattern from last cycle during quantitative tightening and high rates, it would imply Bitcoin tops in April. A local top, right? Calm down, right? But that's what it would imply. Again, over here, it had a top. We cooled off for a while, and then we went up more later on after we had sort of the pandemic crash. But that was a black swan that, you can't really prepare for that sort of stuff. So going back to this idea, if we get a rate cut in May, then it would imply a local top in April, meaning a local top into the halving, right? The Bitcoin halving. But the market's not currently expecting a rate cut in May. The market's expecting a rate cut in June. Pretty good odds right now that we're going to get one in June. And it seems to me that it's relatively likely that it'll happen by June. And the reason I say that is because, they are wanting to do 3 rate cuts this year. If you think about the way they ended rate hikes, they went to basically like 25 basis points, pause, 25 basis point, pause, right? Like they sort of sprinkle them in with pauses in between. And so we only have 6 more meetings this year that they theoretically need to fit 3 rate cuts into, okay? So if they want to do cut, pause, cut, then they need to either start in May or June, right? Because if they start in May, they can do May, July, November. But I'm guessing because the election, they might not want to cut in November, just to not influence, or not to be seen as influencing that. So what I think there's a good chance that could happen here is cut in June, cut in September, cut in December, right? So June, September, December. So if that's the case, right? If that's the case and they don't cut in May, and if Bitcoin follows what it did in 2019, then it means the top is in May, right? If it follows sort of suit of what happened in 2019, it would imply that you have a local top approximately 2 months from now. Now, if you look at what Bitcoin has been doing over here, what's really interesting about this is that we talked about this a little bit in the video yesterday. If you look at what it's been doing, we basically had a local low over here at 39K in late January. And now it's late March, and we just had another big wick to the downside, right? So about 2 months apart. So if we were to take sort of a range here from here to here, that was about 19 weeks. And then from here to here, it was only about 8 weeks, right? But again, 8 weeks between that low and then this low right here. And what you'll see is that after this low, Bitcoin rallied for 7 weeks until the local top was in, right? 7 weeks. Now, I don't know if this is a low or not. It could be. It could also go a little bit further down and get closer to the 8-week SMA. I don't know. I really don't. I mean, I don't really care, to be completely honest. But if you were to go 7 weeks from this wick, 7 weeks out, puts you in. It puts you the week of May 6th. The week of May 6th. So I think that there is some reason, based on the one data point that we have that I'm not asking you to take to the bank, right? But there's some reason to think that, hey, what if it plays out like that, right? What if it's just doing the same thing once again, where we, sort of pull back into the end of the month, and then we get into the following month, and then the market goes back up, right? I mean, because we've had a pretty big pump here by Bitcoin today, but we're still off the highs, right? We're still not at 73K. And so what happened back over here in January is that it came down here, and then it essentially consolidated for about 3 weeks or so, right? You basically had a 3-week consolidation period, and then the 4th week got you back up to the highs, right? The 4th week. We're currently in week number 2. Okay, so what that might imply, again, I don't know, but what it might imply is one more consolidation week after this one, get us through the end of March. Then in April, you sort of see that move back up to the range highs. So that could theoretically happen. Now, where there could be a wrench thrown into this plan is if there's a rate cut in May, right? If there's a rate cut in May, then, waiting until May for a local top might not prove the most ideal, because it could imply that a top comes sooner than that. And I think that is something we have to, and again, there's no way to know. I mean, there's still a chance they cut in May. I think the only way they would really cut in May is if something catastrophic were to happen in the economy, or if, say, the unemployment rate printed 4%, right? If the unemployment rate prints 4%, or say like 4.1, 4.2, when we get the data here in a couple of weeks, then I could envision a scenario where they might cut in May, right? But for now, base case is they cut in June. And if you think about it, it kind of makes sense when you think about the timing of everything, because you had sort of this drop in late January, and then in the early part of February, the market sort of got that labor market data. After getting the labor market data, still seeing that we were below 4%, the market took off, right? So I wonder if that's happening again, right? Where it's sort of in this consolidation zone, but it's also sort of not yet taking off to new highs, because perhaps it's waiting for that labor market data to confirm that, hey, things are still relatively okay for now. So if the unemployment rate were to come in April, if it were to come in at a relatively okay number and it doesn't scare the Fed, then it might not scare the markets because they assume the Fed's not going to cut. If the Fed decides they need to cut based on this, then it could push the rate cut up to May, implying that April could be the more significant month to take a look at. But for now, let's just go with the base case that the market is saying. June, 73%. By the way, I mean, it was advertised in 2019. I mean, I remember they said like, oh, well, the Fed's advertised they're going to cut at the next meeting. So in May, perhaps they will advertise that a rate cut will come in June. Okay. And if that's the case, once it's advertised, that could sort of be where things get a little, flaky, if you will. Because again, the meeting is going to be on May 1st. May 1st. You draw this out, right, from this low to this low here, or to the high, it was 7 weeks. So from that low, 7 weeks out, that puts you May 6th, the week of May 6th. So just after the Fed meeting, imagine you get a scenario where the Fed announces a rate cut occurring in June, and then on the unemployment rate, it prints 4% or something, or 4.1 or 4.2, something like that. And then the market might say, well, okay, fine. They have to cut because the labor market is showing weakness. So I do wonder if that is a case to consider. And it's hard because we only have one data point, right? I mean, I don't know if it's going to play out the same way or not. But that's just what happened last time. And if you look closely here, what you'll see is kind of a very similar pattern in terms of like when the Fed paused, Bitcoin initially sold off, and then it rallied fairly aggressively for a while, right? But what you'll notice is that it first rallied and then consolidated. It then rallied and then consolidated for a smaller period of time, held the 8-week as support, and then it got one final move up. Right, now look over here, right? You have a very similar type of thing where you get your you get your pause, and then the market sells off, right? So the market sold off right there, the market sold off right here, and then it rallied up and then consolidated for a few weeks, right? Rallied up, consolidated for a few weeks. And then from there, it spiked again and then had a pretty sharp drawdown to the 8-week SMA and then one final move up, right? Same thing, right? Pretty sharp move down, it rallied up and then a pretty sharp move down so far. Hasn't reached the 8-week moving average. We'll talk about that in a couple of minutes. And then, is this what has to come next, right? Same thing kind of over here, right? You had a sell-off. This was not during rate hikes, but you had a sell-off, a move up, consolidation for a few weeks, a move up, a smaller consolidation, and then a final move, right? So you had 1, 2, 3, right? 1, 2, 3. And then sort of the equivalent is like 1, 2, and then whatever 3 happens between now and May. They tend to come like in these moves of 3, right? This was also 1, 2, 3. But the reason why, I know a lot of people say, well, why don't you do more price predictions? First of all, like I've done price predictions in the past. Everyone loves them, and then they hate you, is essentially what happens. Because everyone always changes their price prediction. They'll put out a prediction, and then it reaches that level. They just push it higher, right? Until eventually they're wrong. So rather than doing that, my view, as I've said before, is that Bitcoin needs to go high enough to break altcoins off of their Bitcoin support levels. Now, the D-Jones, I mean, look, they have my respect. I mean, they've been keeping up with Bitcoin fairly well for a while. Bitcoin dominance has still gone higher, so I still think Bitcoin is the better place to be from a risk-adjusted returns perspective. There's a difference between your absolute return and your risk-adjusted return. Like a large, say like an institutional investor, they might be okay buying Bitcoin and getting a 2 to 3x or something. They're not going to go buy a random meme coin, right? So that's why I say it's so hard to know what that would correspond to. Does it get the same type of aggressive move, in these 3 cases, right? Where you had 1, 2, and 3, 1, 2, and 3, and then 1, 2, and 3? Or does it get kind of like a muted move, right? Where you get 1, 2, and then the third one was a new high, but only barely a new high, And I don't know. I mean, I really don't know the answer to that question. I think you could find evidence to support both views. I think that if it plays out like that, it could be because the unemployment rate starts to show concerns in April, and that might mute the returns for Bitcoin. And and if it does rally back up to the highs, maybe it sweeps the highs, goes, a little bit higher or something. But it doesn't go a lot above it. Or if, on the other hand, the unemployment rate in April looks okay and is still below 4%, and the Fed doesn't cut in May, then perhaps you get something a little bit more aggressive, right? My point is that at least my view of the market, and a lot of people might disagree with me, and hey, I do think there's a lot of people that are better at predicting the market than I am, but I will say I don't really think anyone can know for sure what's going to happen because it's going to be dependent on variables that we just can't know. So I would say my view, and I've said this before, is that Bitcoin goes high enough to break these altcoins off of their support levels, right? They're all Bitcoin dominance videos, right? To break alts off of their support levels. Remember, alt Bitcoin pairs broke support 1 month before the first rate cut last cycle. 1 month. Meaning in 2019, they fell in June, Bitcoin topped in June, but then Bitcoin rolled over after all Bitcoin pairs had fallen down, and then the Fed started to cut rates. Not that the Fed cares about your altcoin, they don't, but my understanding of the market, which could be flawed, is that when alts break, assuming they do, if and when they break off of their support, then it's sort of an indication that the retail, sort of the consumer is slowing down, right? The consumer is starting to slow down. And so that's why the Fed might cut rates. But again, if the Fed cuts rates in May, which doesn't really seem like the most likely scenario now, then perhaps you see alt Bitcoin pairs break down in April. If the Fed doesn't cut rates until June, then they might not break down until May, right? So I do think that, when you think about what would it take for altcoins to break their Bitcoin support levels, I think it's going to take something in the economic data to force the Fed to cut, right? And that just hasn't happened yet. And I don't know when it's going to happen. I would say my general view is risk on until 56% Bitcoin dominance, because at 56%, alt Bitcoin pairs have broken down, right? They've broken down. Now, the question is well, can we hit 56% dominance in April? I think there's a good chance that we could. I do. But I also could see it happening early May as well for the reasons we just mentioned, right? I mean, it's possible that it takes until like that first or second week of May to see those altcoins break off their Bitcoin support levels. And if that is the case, then, it's just a couple weeks after, or maybe a few weeks after the halving. So that is what I would be looking for here. And again, if you're wondering if you don't care about Bitcoin and you don't care about Bitcoin dominance and you're like, how's this useful to me? Basically, all this stuff means is like, the party goes on until they break support. Once they break support, that's it for a while, more than likely. Again, I could be wrong, and it could be that it plays out differently this time. I'm just basing it off the single data point that we have. So what I would suspect happens is that alt Bitcoin pairs slowly turn the corner here and start to make their way back down to the range lows in April. That is what I suspect. And it might take until late April, early May for them to actually go below it. But that is ultimately what I would expect to see happen. So you could have something like this, right, where it rolls over slowly, comes back down here, maybe bounces, rejected off the bull market support band, and then down. You could see something like that. ETH Bitcoin held up a little bit longer last cycle than alts. It didn't break down until the month of rate cuts. So you could have an example with ETH Bitcoin where it doesn't break down until whenever the Fed cuts rates. Like, it could be June, or it could be May. Now it broke down when the Fed cut rates, but give or take a week or so. So I mean, it could still theoretically come in May, but And you might say, well, ETH Bitcoin is near the range lows right now. Yeah, it is. And that's a little concerning, to be completely honest. But if it bounces off the range low, perhaps it goes back up to the bull market support band and then rolls over into sort of like April, May, and then falls below. And maybe it falls below sometime in like May or June, or even April, right? I don't know. I mean, I said previously that the earliest it would revisit these lows, the range lows, would likely be March. And here we are. Right, it's March. I'm kind of surprised that it's back down to these levels this quickly, because in 2019, it actually took, after the bounce that it had, it bled a lot slower to get back down, and it took until May just to get back down there. But you can see once it tagged this trend line, right, you had a low and then a lower low, and then you tagged the trend line again. It bounced one last time up to the bull market support band, and then finally it fell below it about a month and a half, 2 months later, right? So you say you have the same thing, right? You have a low, then you have a lower low. We're now testing that level again. We also already tested it though. So like, has it already run its course? I don't really know, but it is, we are getting really close to breaking that. So whether it breaks here, or, again, a decent chance too that it hangs around for a little bit, for a few more weeks, and then breaks down. But that is what I'm looking at here as far as rate cuts go and how it relates to Bitcoin. The reason why that's important for Bitcoin is because as long as ETH Bitcoin is up here, it implies there's some liquidity from ETH that's going to make its way back over to Bitcoin. That's the implication. Now, of course, there's a lot of people talking about like this spot ETF stuff for Ethereum potentially being denied, and there's sort of FUD about it being a security. I think all that's noise. I mean, I just think it's based on monetary policy. Last cycle, ETH Bitcoin broke down on the first rate cut, and it bottomed when QE returned. Right, it bottomed when QE returned. So what if it just does the same thing? What if it breaks down on the first rate cut and then it bottoms when QE returns? Maybe it's as simple as that. So again, I think a lot of that other stuff is noise. I would just look at it in terms of monetary policy is how I view it. But going back to Bitcoin, what I would say in the short term is that this move on the daily obviously looks impressive, right? It looks impressive. What I would say though is that what you really want to see is follow through by this move, because this was a strong daily candle back up to the upside. So you really would want to see follow through now if you want to go ahead and run the highs, right? Just one day where it continues to go up. If it doesn't do that, if it just kind of fades back in, you could get one more move down where you sort of tag that low back over here. And the only reason I say that is because as long as we're above the 8-week SMA, the trend remains intact, right? Now, the 8-week SMA is currently at around 57.9K, right? It's just below 58K. And this level here is at like 59K. So if Bitcoin sustains the current move, then we might not even go down there and test it at all anytime soon. But if tomorrow or if today it's unable to see follow through on the move into the 70K range and it bleeds back down, let's say you get another long wick down, that's the level I would be looking at to see if it can hold the 8-week as support by the end of the month. If you look at 2021, right? If you look at this move over here in 2021, what you'll see is that you had a, two red candles down, and then in the third candle it was green, but you still ran the lows and you went to the 8-week moving average. If you look at 2019, right? If you look at 2019, we had sort of a 2-week move to the downside, and then this candle, while it went back up, it still hugged the lows for some point during that week. So I know that everyone's excited, and honestly, like, I don't mean to sort of get you off that, honestly. But I would say that, if there is a pullback again, I would say look at that range low right there at just below 60K, and perhaps as the 8-week SMA is coming up to that level, right? Like right there. We've already gotten pretty close to that, so I'm not saying that, like, you should base your investing decisions on it. anything like that. But if there is sort of another run of the lows or even a wick a little bit lower, I would say that would be your level. Because remember, over here, we went basically to like 38, 39K. This right there would be 58, 59K. We already went to 60K. I'm not trying to split hairs. I'm just saying, like, that's something to think about if you were to see that going into the end of March. If you look, by the way, at just say like year-to-date ROI of Bitcoin, and you compare it to 2021, right? And some people say, well, why do you compare it to 2021? Why not compare it to the halving years? Well, first of all, we're outperforming the halving years, right? Look at it. That's 2014, this is 2016, and this is 2012. So currently, Bitcoin is outperforming all prior halving years. And then I was thinking, if you think about it, last year outperformed the average of the pre-halving years, right? But if you look at last year, and you compare it to halving year returns, you can see that last year mimicked halving year returns. So if last year mimicked halving year returns, maybe this year we'll have some, resemblance to post-halving year returns, right? And you can see that in 2021, right, we rallied up until about the same point, day 72 or so into the year, and then we faded back down. Here we bottomed on day 84. We're currently on day 81. And then it rallied back up into April. Right? It rallied up into April to about a 2.14, 2.17x off the lows. Right? And you can see that this first little top there was nowhere close to that one. This one got a lot closer. What if this one gets even closer? Right? I mean, Bitcoin started the year off at 42K, right? So 2x would be 84. It would put you in the mid 80s. I don't know if Bitcoin's going to go that high. It's possible. I would say that what it needs to do is it just needs to break altcoins off their support levels. So when I think about that, I say, look, I don't know. I know everyone loves all these price predictions that everyone's given out, and there's some pretty lofty ones that I've seen. But my view is that I don't know if it's going to do something like that where it runs the highs, everyone piles in thinking it's going to go up higher, and then it just sort of fades, or if it actually goes up higher. I think the way to get an idea as to whether it's going to play out like that, where it's sort of a muted third rally, or whether you actually get sort of a real third rally. I think the way to get insight into that is if alts have broken down or not, right? If Bitcoin runs the highs and all Bitcoin pairs have broken down, then I'm not going to be thinking to myself, well, now Bitcoin needs to go higher. I'm just going to be thinking, well, this is where Bitcoin turned around in 2019 just before rate cuts arrived. It also might depend on the timing, right? If it's April and it seems like the first rate cut's not going to occur until June, then maybe there's still time for it to run. But if we get into April and the unemployment rate prints 4%, and then all of a sudden all these rate cuts get shifted forward a month, then you might have less time, and then perhaps it would end up being sort of a muted peak where it runs the highs but doesn't go that much higher. But I think that you could make a case either way. For now, I think that you have to be open, right? You have to be open to seeing something like that, right? Where it basically gets that final move to break the altcoins off of their support levels. I've been saying forever, risk on until 56% Bitcoin dominance. Risk on until 56% Bitcoin dominance. Right? We're following it almost to a T, right? You test it again, and then you come back down to the bull market support band, hold it as support or get close to it, and then you blast off through it, right? We tested it again. We've come back down to the bull market support band, and you can see that it's slowly starting to go back up, right? It's slowly starting to go back up. And so the risk, sort of the signal that you look for is that one. When it takes out that high, right? That's what you look for. And the hard part for me is I'd love to give a price associated with that. But how can I know? How can I know how much the altcoins are going to pump relative to Bitcoin? They've been more resilient than I thought they'd be. I'll tip my hat. I can't know, right? So it's just how long does it actually take? And I mean, you can see Bitcoin dominance is spending a lot of time at these range highs, right? It's spending a lot of time at those range highs. So I think it's going to slowly move up. And then I think we're going to get a week or two where it just moves up very aggressively. And then it actually closes up here. And then we'll have to take inventory on where everything is. Because, that is something that I think is extremely relevant right now for this market, is the fact that Bitcoin dominance is slowly building up. And I see all these people on X and in YouTube that sort of take sort of like jabs at the Bitcoin dominance views, that sort of the bullish dominance views. And I will say I could be wrong. Some people have pointed out, like, what if all Bitcoin pairs are in Wyckoff accumulation rather than on the verge of breaking down? And I only say that because I want you to know that there are other opinions out there that might be right, and I could be wrong. That's a reality that I'll have to face. And honestly, I mean, if this is Wyckoff accumulation on alt Bitcoin pairs, I might see myself out of the Cryptoverse for a while. But I will say that I do think that they are likely going to break down for the reasons I've explained many times. And I think that, over here, it was a Bitcoin rally where they broke down. It was a Bitcoin rally. There are cases where they break down on Bitcoin dumps. So I don't want to give you the impression that it's a sure thing. Wouldn't that be something if if everyone goes into the halving thinking we're going to get this massive pump, and then we just drop instead, and then they break down on a dump instead of a pump? Like, it can happen. I've seen it happen. It's just not as frequent, right? Like, it's not as frequent that happens. That's why I say, like, you should have your bias for one thing, but say, look, if the data starts to suggest otherwise, then you have to flip that bias. So what would cause me to flip that view? Well, I've said before, the 8-week. As long as we're above the 8-week, the uptrend is intact. Look at what killed the rally in 2021. Look at what killed the rally once we got below the 8-week. Look what killed it in 2019 once we got below the 8-week. Now, we already did go below it very briefly, but again, it was a fake out. Now, that sounds like a cop out, and it kind of is. It's only obvious in hindsight. But I said back over here, right? If you don't actually go to the bull market support band, then it could end up being a fake out. But if you start to get multiple weekly closes below the 8-week moving average, then I think that sort of the bias has to flip. But we're not there right now, right? We're still well above the 8-week estimate. In fact, Bitcoin would have to drop from the current levels. I mean, it'd have to drop about 15%, 15% just to get back to the 8-week moving average. The only reason I keep bringing it up is because we've seen sort of all these prior drops were about 20 to 22%, right? 20 to 22%, even this one over here in January. And so far, this one has been about 17 to 18%. So I don't know if it needs to go down any further. If you look at 2019, the drop that it had was only about 18% or so, I think. Yeah, it was about 17, 18%, right? It didn't go any further down than this, right? It was about 17.79% or so. That's essentially what we're at, right? We've already seen that. So I don't want to give you the impression that it has to go to the 8-week estimate. It certainly does not. And even in 2019, it didn't. I mean, it looks like it did, but if you zoom in, it didn't actually go there on this red week. The next week, it hit it, but it was only because the 8-week estimate increased up to it, right? Over here, the 8-week estimate was at like 7,000. Then here, it was at like 7,500. So, I mean, you could have an example where it does go to the 8-week estimate, but if you think about where the 8-week estimate is and it continues to sort of slowly go up, next week, the 8-week estimate could be at that low. So even if you do get another wick to the downside, it might not go any lower than the prior one or even slightly lower, but it could correspond to testing that 8-week moving average. So as long as the 8-week moving average holds, then I think that the uptrend is intact. Below the 8-week SMA, it's still not a sure thing because you have sort of this case in point right here Where I think things change is if you go to the 20-week estimate, right down here. I don't think the bulls want to go to the bull market support band at this point. 3 months ago, I think it would have been okay, right? But history shows when you go, more than 3 to 4 months, we're now at, 22 weeks. When you go that long, you're not going to hold it more than likely whenever you do test it, right? So that's why I'm saying, like, I don't think the bulls want to go to the bull market support band at this point. I think that in order for this to continue, we likely will need to stay above the 8-week SMA. If the bulls give up the 8-week SMA and we go to the bull market support band, that's where things start to get a bit more dicey, right? And so that's why it's not obvious, right? It's certainly not obvious. But I think it all comes back to alt Bitcoin pairs. It comes back to, to Bitcoin dominance, right? To ETH Bitcoin. The pieces of the puzzle are there. I would encourage you not to, forget about them. Because just as the euphoria creeps in, it's easy to ignore all the things we've talked about for years, right? For years. Now, my view for the last 2 years has just been Bitcoin heavy crypto portfolio, right? I mean, you can look at all this stuff and say, well, there's probably something bad happening on the other side of it, but that doesn't mean that you just walk around with, only cash, right? So I think that the risk-off signal is when alt Bitcoin pairs break down. But look, they haven't broken down yet, and I don't know how long it's going to take. Going back to what we previously spoke about, we know that last cycle, they broke down 1 month before the first rate cut, which is where Bitcoin USD topped. The first rate cut is potentially coming in June, so maybe May is the window. If the first rate cut is shifted to May, then perhaps April is the window. If you get a cut in May, then I think you're more likely to just sort of run the high, but not really go that much higher, right? Kind of like this, kind of like what happened over here, right? So if the first rate cut comes in April, then you might do something like that. If the first rate cut comes in, if the first rate cut comes in May, then you might do something like this, where you get sort of a tempered move in that third move. If the first cut does not come until June, then you could have something a little bit more aggressive than that, right? Where you actually go up, considerably higher than the prior high, right? And I've had a lot of people ask me about, different indicators that we've talked about. And, some of them have already flashed, right? We talked about gold. Gold is putting in new highs. And I think the reason is because, the Fed came out and confirmed that, rate cuts are coming, right? Gold really likes to go back to looser monetary policy, especially if it sniffs out, some labor market weakness and that sort of stuff. So it's continuing to put in new highs, which definitely makes sense. I'm pretty long-term bullish on gold. But the other thing that I've mentioned is the USDT dominance. Now, I just want to say one last thing about this, and I'm not going to keep bringing it up. We've talked about this trend line for a while, and I spoke about this trend line back over here. I said, look, guys, it could very well break to these levels and come back to the trend line. I'm not asking you to take it to the bank. I'm not. I don't look at diagonal trend lines and assume they have to hold. It could hold, right? And if it does, it will have seemed obvious, but they don't have to hold. I think what's more relevant is to look at horizontal support levels. So you can see that this support level is the same support level as here. If we go below that level, then the level that you look at, I think, is right here from November of 2021, where the USDT dominance would be at around 2.4%. So if we go below, 3.75%, the next level of support on USDT dominance, in my view, is around 2.4%. I just wanted to clarify that. I don't take stablecoin dominance trend lines, especially diagonal trend lines, to the bank. Look at the horizontal support levels. We've hit one of them. We've bounced a little bit. And you can see that, it's almost bounced up to the 8-week SMA itself, but not quite. So if next week, if it's definitively rolling back around, then at the very least, you'll probably come back and retest this trend line, just like we saw it retested multiple times in March of 2021, February, March, and April, May of 2021. But those are essentially my views, on monetary policy, on rate cuts, and all that stuff. And I hope they're useful. I don't intend that everything that I said is going to be true. In fact, most of it probably won't be true. But that is my view that we can at least talk about with the market. And I wouldn't even necessarily go as far as say it's my view. It's just like this is what happened last time we had rate cuts. Who knows if that's what happens again? But this is what happened last time. Again, I don't base my own investment decisions on it. I just stick to the risk levels. Whatever they're doing, I'll follow those. But I'm just trying to provide some commentary on the market. And I think that we are getting really close to rate cuts. My guess is either May or June is my guess. I mean, it's possible they go out until July, but I think the issue with that is that then you're going to have to do 2 back-to-back in order to sneak in 3 before the end of the year. And they're probably not going to want to do it in November. So I'm guessing, they might do one in December and September and maybe June. June, September, December. So that might be the most likely outcome for the rest of the year. Or if not, if the economic data weakens quickly, then maybe it'd be May, July, and then December or something. But that's where we stand. Hopefully you guys enjoyed the content. Remember to subscribe to the channel, give the video a thumbs up, and again, check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. I'll see you guys next time. Bye.